Welcome back to XRP Insider, your trusted source for the latest XRP news, crypto analysis, and market insights. Today we're diving into one of the biggest questions investors are asking right now. Is XRP still worth buying at today's price? XRP is currently sitting around $1.37 after falling nearly 62% from its massive peak near $3.65 back in July of 2025. And naturally, that huge drop has left investors wondering whether this is an incredible buying opportunity or a warning sign that bigger problems are hiding underneath the surface. A lot of people see a lower price and instantly think, discount. But smart investors know there's much more to the story than just the number on the screen. The real question isn't simply whether XRP is cheaper than before. The real question is whether the factors driving XRP's long-term value are still strong enough to justify investing fresh money into the project today. And honestly, once you start looking deeper into Ripple's business model, the XRP ledger, and how financial institutions actually use XRP behind the scenes, things become much more complicated than most headlines make it sound. One of the reasons XRP has remained such a powerful name in crypto is because Ripple has built relationships that most blockchain projects could only dream about. We're talking about more than 300 financial institutions connected to RippleNet and the XRP ledger ecosystem. That kind of institutional reach gives XRP a level of credibility that many altcoins simply do not have. For years, XRP supporters have argued that once banks fully adopt Ripple technology, the value of XRP could explode because financial institutions would supposedly need the token for global payments and liquidity transfers. And at first glance, that argument sounds incredibly convincing. After all, if major banks and payment providers are using XRP, shouldn't demand naturally rise over time? Well, according to the latest information, the reality may not be as straightforward as many investors hoped. The biggest issue is that not every institution connected to RippleNet actually uses XRP directly. In fact, reports suggest that only around 40% of those institutions are currently using XRP for settlement through Ripple's On-Demand Liquidity service, also known as ODL. That detail changes the entire conversation because it means Ripple's network can grow successfully even if XRP adoption itself grows much slower. This is where many investors start to realize there's a massive difference between Ripple's success as a company and XRP's success as an investment asset. RippleNet can continue expanding globally, signing partnerships, increasing transaction volume, and building infrastructure while XRP holders may not necessarily benefit as much as expected. That's because XRP inside the ODL system functions more like a temporary bridge currency rather than an asset institutions hold long-term. When banks use XRP for liquidity transfers, the token is often held for only a few seconds before being converted into another currency. That process creates efficiency for cross-border payments, but it does not automatically create strong, sustained buying pressure for XRP itself. And this is a major point that many retail investors overlook. The excitement around institutional adoption sounds bullish, but if institutions are not holding large amounts of XRP over extended periods, the long-term impact on price could end up being much weaker than the community originally believed. That doesn't mean XRP has no future, but it does mean investors need to understand exactly what kind of demand is being created and whether that demand is strong enough to support massive price appreciation over time. Another huge factor changing the XRP conversation right now is Ripple's stablecoin known as RLUSD. Stablecoins have become one of the fastest-growing sectors in crypto because they offer the speed and efficiency of blockchain technology without the extreme price volatility that comes with traditional cryptocurrencies. And for financial institutions, stability matters more than hype. Banks don't want to move millions of dollars across borders while worrying about sudden price swings during transactions. That's exactly why RLUSD could eventually become more attractive for many institutional payment systems than XRP itself. Ripple now allows RLUSD to function alongside XRP within Ripple payments, which means institutions have another option when settling transactions. If banks increasingly choose stablecoins instead of XRP for transfers, then Ripple could continue succeeding as a financial technology company, while XRP holders see far less direct benefit than expected. This creates a very important concern for investors because it suggests Ripple's ecosystem may eventually evolve in a way where XRP is no longer the center of the entire strategy. And if that happens, some of the biggest bullish assumptions about XRP's future demand could become much weaker than many long-term holders anticipated. Despite all these concerns, XRP supporters still have several strong arguments working in their favor. One of the biggest is the simple fact that XRP remains one of the strongest communities in all of crypto. The XRP army has survived lawsuits, market crashes, regulatory uncertainty, exchange delistings, and years of negative headlines. Yet the community remains incredibly active and loyal. That kind of long-term investor conviction matters more than many people realize because strong communities often help assets survive difficult market cycles and maintain relevance even during periods of uncertainty. XRP holders have consistently shown patience and belief in Ripple's long-term vision, and that support creates stability around the project. Even after dropping more than 60% from its peak, XRP still maintains an enormous market cap around $84 billion, proving that institutional and retail interest has not disappeared. In crypto markets, sentiment plays a huge role, and XRP continues to hold one of the most passionate followings in the industry. That alone keeps many investors optimistic that another major rally could still happen if market conditions improve and Ripple continues expanding its ecosystem globally. Another bullish development for XRP has been the arrival of spot exchange-traded funds holding the asset. Since launching back in November 2025, these XRP ETFs have reportedly attracted around $1.4 billion in inflows, which is an important sign that institutional interest still exists, despite the concerns surrounding XRP's long-term fundamentals. ETFs create easier access for traditional investors who may not want to deal with crypto wallets, exchanges, or blockchain technology directly. The more financial products connected to XRP that enter the market, the more legitimacy and visibility the asset gains in mainstream finance. And history has shown that institutional accessibility can dramatically impact prices in the crypto space. We saw it happen with Bitcoin ETFs, and many XRP supporters believe similar momentum could continue building over time. While ETF inflows alone do not guarantee permanent price increases, they do show that large pools of capital are still willing to take XRP seriously as an investment opportunity. That's an important signal because institutional interest often helps strengthen market confidence, even during periods when retail investors become uncertain or fearful about the future direction of the asset. Ripple's own financial incentives also play a massive role in XRP's future potential. Ripple reportedly controls around 40 billion XRP through escrow systems and operational wallets, meaning the company itself has a huge reason to support the token's value over the long term. If XRP succeeds, Ripple benefits enormously. That creates a situation where Ripple is heavily motivated to maintain positive market sentiment through partnerships, technology upgrades, lobbying efforts, ecosystem expansion, and careful supply management. Some investors view this as a strong advantage because Ripple has both the resources and the motivation to continue building value around the XRP ecosystem. Others, however, see this concentration of control as a risk because Ripple's influence over supply and messaging creates concerns about centralization. Regardless of which side investors fall on, one thing is clear: Ripple's future actions will likely continue having a major impact on XRP's price performance. The company's announcements alone can move the market dramatically, and that level of influence means XRP investors are effectively betting not just on blockchain technology, but also on Ripple's strategic decisions moving forward. One thing many investors struggle with is separating emotion from investment logic. XRP has one of the most emotionally charged communities in crypto because many holders truly believe the asset has the potential to transform global finance. Some supporters envision XRP eventually becoming a bridge asset for international banking systems worldwide, while others see it as a long-term wealth-building opportunity capable of reaching extremely high price targets in the future. But smart investing requires stepping back from emotional narratives and examining the actual mechanics behind how value is created. Right now, one of the biggest criticisms from analysts is that XRP's utility does not necessarily translate into strong demand pressure on the token itself. That's a critical distinction because an asset can have real-world use cases without automatically generating explosive returns for investors. Understanding this difference is essential for anyone considering putting new money into XRP today. It doesn't mean XRP is doomed. It simply means investors should avoid assuming that Ripple's business success will automatically guarantee massive gains for XRP holders without carefully analyzing how the system actually functions behind the scenes. There's also the broader crypto market environment to consider. XRP's future will not exist in isolation because the entire digital asset market remains heavily influenced by Bitcoin, institutional liquidity, government regulation, and global economic conditions. If crypto enters another major bull market cycle, XRP could rise significantly, even if some of its underlying fundamentals remain questionable. In crypto, momentum and speculation often drive prices just as much as utility and adoption. That's why some analysts believe XRP could still perform well despite concerns about long-term token economics. Markets don't always move based purely on fundamentals. Sometimes narrative, hype, and investor psychology become the dominant forces. XRP has historically benefited from strong retail enthusiasm, and if another wave of excitement enters the market, the token could experience major upside simply because millions of traders still recognize the brand and believe in its long-term potential. That possibility keeps many investors interested, even while critics continue raising legitimate questions about whether XRP's real utility is strong enough to justify massive future valuations. At the same time, competition inside the crypto payment sector is becoming more intense every year. Stablecoins are rapidly growing, central bank digital currencies continue developing globally, and multiple blockchain networks are now targeting cross-border payments and institutional finance. XRP no longer exists in a space with limited competition. Financial institutions now have many different technologies to choose from, and that means Ripple must continue innovating aggressively to maintain its position. This competitive pressure is important because even if Ripple built an early advantage, the market is evolving extremely fast. Investors need to ask themselves whether XRP can maintain relevance as newer solutions emerge. Can Ripple continue convincing institutions to choose XRP over stablecoins or other blockchain systems? That question remains one of the biggest unknowns for the project moving forward. While Ripple's partnerships and infrastructure are impressive, long-term dominance is never guaranteed in technology markets, especially in crypto where innovation moves incredibly fast and new competitors appear constantly. One interesting point raised in the latest analysis is that XRP at $1.37 may not actually be overpriced, despite all the concerns surrounding it. Many investors hear criticism and assume analysts are calling for XRP to collapse completely, but that's not necessarily the case here. The argument being made is more nuanced. XRP may still rise over time, and current holders may not have an urgent reason to sell. But deploying fresh capital into the asset requires confidence that Ripple will eventually make XRP more attractive to hold long-term. Right now, analysts argue there is limited evidence that such a shift is happening. That creates a situation where XRP could continue performing reasonably well while still carrying questions about whether it represents the best possible investment opportunity compared to other assets in the crypto market. Investors therefore face a difficult decision. Is XRP still capable of delivering strong returns? Possibly yes, but are there clearer growth stories elsewhere in crypto or even in traditional markets? That's the debate becoming increasingly common among analysts today. Another important factor worth discussing is the psychological effect of XRP's previous all-time highs. Whenever an asset falls dramatically from a major peak, investors naturally start comparing the current price to where it once traded. Seeing XRP at $1.37 after it once reached nearly $3.65 makes many people feel like the asset is cheap. But experienced investors understand that price alone doesn't determine value. An asset trading lower than before does not automatically mean it's undervalued. What matters is whether the underlying drivers supporting long-term growth remain strong enough to justify higher future prices. That's why analysts continue focusing heavily on XRP's utility model, institutional adoption structure, and Ripple's strategic direction. These are the variables that ultimately determine whether XRP deserves to revisit previous highs or potentially move even higher in future market cycles. Investors who focus only on the percentage drop without analyzing the deeper fundamentals risk making emotional decisions instead of informed investment choices. At the center of this entire debate is one very simple but powerful question. What exactly are XRP investors buying today? Are they buying exposure to Ripple's institutional network growth? Are they buying a future global payment standard? Or are they mainly buying into community belief, speculation, and long-term market momentum? The answer is probably a combination of all three, and that's what makes XRP such a fascinating asset in the crypto world. Unlike many meme coins that rely almost entirely on hype, XRP does have real infrastructure, partnerships, and utility behind it. But unlike traditional investments where revenue and ownership structures are more direct, XRP holders do not necessarily receive clear value capture from Ripple's business growth. That disconnect creates uncertainty, and uncertainty often leads to sharp debates between bullish supporters and skeptical analysts. Both sides present compelling arguments, which is why XRP remains one of the most discussed cryptocurrencies in the market, even after so many years. Looking ahead, regulatory developments could also play a huge role in shaping XRP's future trajectory. Ripple has spent years fighting legal battles and navigating complicated relationships with regulators, particularly in the United States. Any positive regulatory clarity moving forward could significantly strengthen investor confidence and potentially open the door for wider institutional adoption. On the other hand, stricter regulations targeting crypto markets could create new challenges not only for XRP, but for the entire industry. This uncertainty is one reason why many investors remain cautious, even while acknowledging XRP's potential upside. Regulation has become one of the biggest market-moving forces in crypto, and projects with institutional ambitions like Ripple are especially affected by government policy decisions. Investors therefore need to monitor not just technology and partnerships, but also the evolving legal environment surrounding digital assets globally. One reason XRP continues attracting attention is because it sits at the intersection of traditional finance and cryptocurrency innovation. Ripple isn't just trying to build another decentralized application or speculative token ecosystem. The company is targeting real financial infrastructure and attempting to solve actual inefficiencies in global payments. That mission gives XRP a different identity compared to many other crypto assets. For some investors, that makes XRP more credible and attractive. For others, it raises concerns about centralization and dependence on corporate strategy. Either way, XRP occupies a unique position in the market, and that uniqueness is part of why debates around its future remain so intense. Investors are essentially trying to predict whether Ripple's institutional approach will eventually create enormous value for XRP holders, or whether the benefits of Ripple's growth will mostly remain concentrated within the company itself, rather than flowing directly to the token. At the end of the day, XRP's future likely depends on several factors coming together at the same time. Continued institutional adoption, growing ETF inflows, positive regulation, strong community support, and broader crypto market momentum could all push XRP significantly higher over the long term. But concerns surrounding utility-driven demand, competition from stablecoins like RLUSD, and the disconnect between Ripple's business success and XRP holder value remain serious issues investors cannot ignore. That's why XRP remains both exciting and controversial at the same time. Some investors see one of the biggest opportunities in crypto, while others see an asset whose narrative may be stronger than its actual value drivers. The truth probably lies somewhere in the middle, and that's exactly why the debate around XRP is far from over. Thanks for watching XRP Insider. If you enjoyed today's breakdown and want more XRP news, market updates, and crypto analysis delivered in simple, easy-to-understand language, make sure you subscribe and turn on notifications so you never miss an update. XRP continues to be one of the most talked about assets in crypto, and whether you're bullish, cautious, or simply curious, staying informed is more important now than ever before. Let us know in the comments below. Do you think XRP is still worth buying at today's price? Or are better opportunities starting to emerge elsewhere in the market? We'll be watching the latest developments closely, and we'll see you in the next one right here on XRP Insider.